Welcome back to the floor of the CME Group here. Let's do another production of the CMZ. I'm Jeff Kilburg from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in overnight cash management. Now let's get into the trade. Let's talk about the zone. Another day, update yesterday, referred to it, and it was kind of to use the Dr. J word, a heat-seeking missile up to 24.75, trying to take out that S&P high. They did. They made a marginal new high in the contract, come off since the unemployment numbers come out. Pretty weak unemployment number, but it doesn't seem like it's really mattering. That's the most amazing thing. They broke the S&P down to 12.13. It hung there. They found bids, went back up to 21. It's kind of hovering right now at the 17.18, borderline unchanged on the day. Let's talk a little bit about the Treasury market. I spoke with Kevin Ferry of Cronus Furures this morning prior to the number. He liked the 3% rejection in the 10-year. We agreed on that, and on the number, they bought every bond, every 10-year note across the curve they could get. We talked yesterday about that 124.30 level. If you saw the overnight high was 124.30, it came all the way down to 124.02. That was a great level. Went back above, and then when you saw it today, it came back after the number, went under 124.30. They sold everything. It was a stop from 124.29 down to 22. Came back up to 25, down to 12. Now it's currently back up around 125 even. So be very mindful of the 124.30 level in the 30-year. Back to the S&P. This marginal new high. There is room to go to the downside. However, it just feels like there's a bid. Who's bidding? We don't know. It's the end of the year. Maybe the government's bidding. Maybe it's part of that $600 billion stimulus package. They're buying S&P futures. I would not be surprised to find that out in a couple of years. I think the NASI and the Dow future did not make a marginal high. Maybe they will. They'll allow this thing to breathe back and come off the last 2 days up down. The euro currency, overnight we had a spike above that 130, 142 level. That was a 200-day moving average I spoke to the last couple days. We did not get under it. Now we are making new highs up at 133 right now. It's going to be very, very tough for that euro currency to come off the way they crushed the dollar index today. So be mindful of these levels. I think that S&P call up to 24.75 is a good entry spot. However, this thing does feel like it wants to go higher due to the fact that unemployment number was horrible. Not horrible, but pretty bad, let's be honest. And it didn't really whack it like we wanted to. So next I want to introduce Kevin Ferry, Cronus Furures. Kevin and I share an office together, collaborate ideas, a good friend of mine and a great economist.
Thanks, Jeff. This is Kevin Ferry of Cronus Furures, CNBC market analyst, floor of the CME Group. Today we're talking about the belly of the curve. That's the big important part. And if you want to join the wild, wild west of trading, remember 3 colors: red, green, blue. These Eurodollar packages are the interest rate risk for 2012, 2013, and 2014. So here's the theme to take forward. We're all Mayans now. Everything that's happening has nothing to do between now and 2012. Whether it's taxes in America or fixing Europe, it's all getting kicked down the road. So between now and then, the party is on, and you're seeing it every day in the markets. Commodities up today with the dollar down. And that theme comes back to the marketplace so rapidly whenever stability is the main concept in the world. So traders like instability, the press likes to talk about stability. Play the difference between the two. If you just went into Thanksgiving saying that the S&P would be at 12.25 and the dollar-euro rate would be at 133 with Europe melting, the bailout would have been considered an unmitigated success. Instead, Europe did nothing, and we're at those levels. So bring your mitt and bring your knee pads, but keep an eye on the interest rates between 2012 and 2014. From now and then, play the game. After then, who knows if we're going to be standing.